Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, I'm going to talk about 3 industrial dividend stocks that you definitely want to consider putting on your portfolio. As always, please remember this is not a financial advice. This is just me sharing. This is just for entertainment purposes. If you are new to the channel, just wanted to say aloha, welcome to the channel. If you are new to investing and you want to learn about which companies to invest on, which companies I look at, whether it's dividends, growth stocks, or penny stocks, you've definitely come to the right channel. You definitely want to hit that subscribe button. Don't forget to hit that notification bell so you don't miss out on some of the videos that I put out. With that said, let's take a look at these 3 companies, industrial dividend stocks that you may want to consider. First on the list is 3M. The ticker symbol is MMM. This is one of the companies that I personally invest on. I personally love this company. It is a great dividend company. A lot of the products that you probably use in your household, it's probably made by this company, which is 3M. So if you look down through some of the products, you can see they have all these products from tapes to protective equipment to equipment from medical films and sheets, and then filtration systems. So definitely, if you're not investing in this company, definitely do your research, check it out. I personally like this company. I think this is a solid dividend company. Now, if we look at tip ranks, based on tip ranks at the time of this video, it was 198. Their price target is in 199 with a 0.6% upside. Their analysis rating is a hold, however, with 6 holds and 2 sells. Their price target is in the high of 218, the average of 199, and the low of 181. Now, if we look at Weibull, based on their analysis, there were 21 of them. They recommended as a hold with only 4% strong buy, a buy of 9%, and a hold of 66%. They did have an underperform of 14% and a sell of 4%. Now, if we look at their price target, they have a high of 218, the average of 196, and the low of 134. Now, looking down further to the institutional holdings, you can see about 926 of them have increased. 180 are new. They have decreased of 766, and they sold out of 103. Now, if we look at Yahoo Finance, as you can see, now if we look down to the earnings, you can see there is a earnings that's going to come up in July 27. However, there have been 3 beats and 1 miss. Now, if we look at the financials, you can see pretty solid. Their revenue is for the 2020 32.18 billion. Their earnings is 5.38 billion. Now, if we look at the recommended trends, you can see it is a mixture for the past couple of months of between a strong buy holds, and underperform. Their rating right now is currently as a hold with the price target of right in the average of currently right now it's at 198 and the average is 196. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rated this as a safe with a 75. The dividend yield is 2.99. Again, the market cap is 116 billion. Looking down through the key metrics, you can see the payout ratio is about 63 with a dividend increase of the 07 and 09. Now, looking down to the dividend growth, the last 5 years it's been up 7%. The last 20 years, however, it's up 8%, which is fast, which is great. Now, what I really like about this one is that for 62 years, they have consecutively increased their dividend, and it has been uninterrupted, 62 years without a reduction. So solid company. Now, your schedule, if you choose to invest on this one, would be paid quarterly. You'll get it on March, June, September, and December with the annual payout of $5.92. So again, make sure you pay attention to the ex-dividend date, which is May 20th. Then you get your payout on June 12th. Now, if we look down to Google, you can see for the past 5 years, it's been 9%. For the year, it's up 30%. Year to date, it's about 15%. 6 months, it's been 20%. And then the year, for 1 month, it's been down 2%. So in my opinion, it is an opportunity to grab more shares of this great company. The past 5 days, you can see a little dip in here. So again, PE ratio is about 20. 52-week high is about 208, and the low is 148. So solid company to consider investing on. So again, do your own due diligence. But for me, I'm definitely a buyer for 3M. Next on the list, we have C.H. Robinson. Ticker symbol is CHRW. This is a company that offers freight transportation, transportation management, brokerage, and warehouse. So you can see from their website, you get your freight or supply chain solutions. They even have a fuel carrier advantage card if you want to apply it. So these are some of the businesses that they partner with: Microsoft, Lyft, General Mills, Kimberly-Clark, Pepsi, and then Lowe's. Now, if we look at Google, you can see the 5-year one is up 27%. For the year, it's up 13%. Year to date is down 0.66. 6 months is down 4% or 5%. For the month, it's down 7%. And then the 5 days is up 2%. So I usually like to look at the 5-year. That tells me whether this is a solid company. Looking at it is definitely I like what I see. PE ratio is about 20, and then your 52-week high is about 106. So we still got a long way to go to reach that 152-week high. Now, if we look at tip ranks, based on tip ranks, their price target is 100 with 8% upside. Analysis rating currently is a hold based on 4 buys, 5 holds, and 3 sell. Now, their price target is in the high of 117, the average of 100, and the low of 60. Now, looking at Weibull, you can see based on their analysis, 24 of them said it is a hold with strong buy of 4%, a hold of 66%, and an underperform of 12%, and you got your buy of 16%. Now, comparing what Weibull looks at in terms of the price target, you can see their high is 118, the average is 102, and then you got your low of 60. Now, let's take a look at Simply Safe Dividend. Based on their dividend safety score, they got a rate of 92, which is very safe. The dividend yield is 2.22. Market cap is about 12 billion. Looking down again to the payout ratio, you can see 46%, with the dividend growth for the last 5 years of 5%, the last 20 years, which is 17%, which is very fast. Now looking at the growth streak, so again, I love it when I see these things, 26 years of consecutive increases. So that's something that I always try to look at, and uninterrupted. So for the past 26 years, they've been growing. It's not been cut. Now, if you look at the schedule, you're going to get paid quarterly in the months of January, April, July, and September, with the annual payout of $2.04 per share. The ex-dividend is June 3. Then your payout date is July 1st. Now, if we look at Google, you can see the 5-year, it's been 99. Again, the year to date is 37. Now and then the year to date is 7%. 6 months is 0.3, and then you got your 1 month, it's a negative 7% or 8%. So again, the PE ratio is about 18. Again, another great company that I definitely like. Last on the list is Cummins Corporation. The ticker symbol is CMI. This is a company that designs, manufactures, distributes engines, filtrations, and power products. So you can see They have this turbochargers. Looking at their website, there's a lot more videos about this geometry turbocharger. So definitely check this out if this is something that you want to consider putting in your portfolio. Now, if we look at tip ranks, their price target is 288 with 21% upside. Their analysis rated as a moderate buy. You got 3 buys, 8 holds, and 0 sell, with the price target of 358, the average price of 288, and the low of 260. Now, if we look at Weibull, getting that comparison, you can see based on 26 analysis, they rated as a buy, with a hold of 61%, a buy of 15%, and a strong buy of 23%. Now, their price target is pretty similar, with the high of 358, the average of 292, and the low of 60. Now, looking at Simply Safe Dividend, based on their safety score, they rated it as very safe, which is 98. Again, dividend yield is 2.27, market cap is 34 billion. Looking down to the key metrics, you can see payout ratio is about 42, with recession dividend is maintained. Now, checking out the dividend growth, you can see the last 5 years, it's been up 9%, which is fast. The last 20 years, it's up 15%, which is very fast. So that's awesome to see. Now, they haven't grown this for the past 15 years. They've increased it, but they have uninterrupted dividend streak of 28 years without a reduction. So your payout schedule would be quarterly, would be March, June, September, and December, with the annual payout of $5.40, with your ex-dividend is May 20, and then you get your payout of June 3rd. Now, if you look at Google, you can see the past 5 years, it's up 99. 1 year, it's up 37. Year to date, and then you got 7%. 6 months is 0.3, and then you got your month, which is 0.72. So I definitely, again, one of the companies that I definitely am considering putting in my own portfolio. With that said, thank you so much for watching, guys. Hope you like this video. If you do, give it a thumbs up. If you're not yet a subscriber, you definitely want to hit that subscribe button. Don't forget to hit that notification bell. As always, please remember to do your own research. This is not financial advice. With that said, thank you so much. I really do appreciate you guys. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care.